What are bond yields, and why do you care about them if you're looking to buy a home or your mortgage is up for renewal soon? If you don't know me, my name is Tiff Iden. I'm a realtor in the Kitchener-Waterloo area of Ontario, Canada. There's a lot of information that I think we take for granted in this industry, working on the inside and dealing with it every day, that doesn't get shared back as readily to buyers who really need that information if they're trying to get into the market. So I'm on a mission to put more information out there and make it more accessible for buyers to get the information they need as professionals supporting them on their home buying journey. I'm about to hop on the phone with Leslie Morris of Dominion Lending. She has over 20 years of experience in the lending industry and also manages a team of 24 other mortgage agents. So I'm going to find out from her what her professional take is on what's happening with bond yields right now and how buyers can take advantage of this possible opportunity coming up in the market to buy a home. So Leslie, there's been a lot of talk in the news over the last week or so about what the bond yields are doing, but I think a lot of people probably don't realize what bond yields even are and why they matter if you're house shopping or up for renewal soon and you're looking at fixed rates. So can you maybe just explain that for us first?
Yeah, absolutely. So bond yields are directly related to our fixed rates. The banks actually obtain the money for our fixed rates from the bond market. So the bond yields is the expectation that investors are going to see from the return of their money when they purchase a bond. So as those bonds get less expensive to purchase and the return is better, then we actually see better interest rates for our fixed rate mortgages. So lately we've been seeing those come down. Even though we haven't seen the prime rate come down, the bond market has actually been decreasing. So that's going to have a positive impact on our fixed rates.
Right. And the prime rate that you're talking about, these are the big Bank of Canada announcements that tend to get a lot of news coverage. So it's funny that we see that in the news all the time, but not as much talk about what bond yields are doing. And do you have an idea for everyday residential home buyers, how many people are shopping on fixed rate versus a variable right now?
Yeah, I would say fixed versus variable right now, probably 95% are shopping on a fixed rate right now. Our variable rate has seen considerable increases over the last 18 to 20 months or so now. Most consumers are shopping on those fixed rates. So the bond market and what that's doing is so much more important than really where our prime rate is. Although that they do influence each other, because obviously if we're in an inflationary period, the bond markets react to that. But right now what we're hearing in the market and what we're hearing from economists and hearing from investors is that they're expecting us to move into zero growth or even into a possible recession or soft landing, which will actually mean that we're going to start seeing a decrease to interest rates and as opposed to an increase, right? And that's having our positive impact on our bond market, which means our fixed rates are starting to come down. We've actually seen a decrease to those fixed rates, probably about 20 basis points in the last week.
Really good news for buyers, especially those who have been kind of sidelined because prices have come down, but unfortunately the interest rate environment has been such that it's still unattainable for so many people, or they've been bumped out of the product that they're shopping for. Of course, looking back at what happened in the spring of this year when we saw some improvement with fixed rates, I always tell my buyers, if you're waiting for interest rates to come down, you can bet your bottom dollar, so is everyone else. So this could also mean that it might not be very long before a lot of buyers return to the market, and that could have an upward effect on pricing. So, I mean, if you're working with buyers right now, from a lending perspective, how can buyers kind of stay ahead of this and make the most of the opportunity?
Yeah, even in the spring, so one of the major issues that we had when rates did increase to the level that they did is that there was such an increase in a demand for housing, especially in our area, right? So that pushed prices
Mm-hmm.
up. Each time the rates start coming down, affordability does increase. So getting into the market now before people start to realize that those fixed rates are coming down, and we're probably going to see a continuation of those fixed rates coming down, now is really the time to start looking for that home because prices are still down. They won't stay that way. Like you said, we saw that in the spring and the government saw it. It blew up to such a degree that they had to increase prime twice more over the summer just to correct what happened to the housing market over a very short period of time of fixed rates dropping. Fixed rates dropped and housing prices went up. And it was over a 2 or 3 week period. It was very, very quickly.
Yes, it was like
Yeah.
someone lit a wildfire in dry conditions. It was
That's right.
nuts. Yeah.
Yeah. Yeah. So we would anticipate to see that again. Like, the buyers are there, right?
Mm-hmm.
Our sellers have backed off a bit. They're waiting to try to see better return on their investment. They want to sell their houses for a higher price. That they're the ones waiting for those rates to drop. Buyers shouldn't be. Buyers should actually be just watching this slight decrease, try to get affordability up there, but now is the time to buy. Now we're balancing between that buyer and seller's market, and it is going to quickly shift back to seller, especially in our.
And inventory is still low in this area. So it's kind of setting us up if all goes as expected. And we've talked about this in the past. Neither you nor I have a crystal ball. So of course, all of this is hearsay and maybe it doesn't go the way we're expecting. But if it does, then I think we need to make sure that we're anticipating that. And I totally get what you're saying there about taking advantage of the higher rates and the lower prices, because rates are probably going to come back down and there's going to be an avenue for you to access lower rates after the fact, but you won't be able to access that lower price.
That's right. Like you and I have said before, that age old saying that we hear all over the market, especially in our industry, right? Like marry the house, date the rate, because that rate does reset and you have the opportunity to get a different rate at some point in time. Like, yes, your payment might be elevated right now, but it's not going to stay that way. And if you think of your home like an investment, it's not the first house you buy. It's not all the houses. And if you move in between that matter, it's really what you paid for that first house and what you sell your last house for. That is the nature of that long-term investment you are making in the real estate market. The rates fluctuate during that time. They do on our RSPs, they do on our mutual funds, they do on any other investment that we invest in. So really, like, getting into the market, getting a great price for that house, knowing that because prices are low right now, you are going to build equity. So finding a payment you're comfortable with, finding that property that suits your needs. Maybe it's not your forever home, but it suits your needs.
Yes.
Makes complete sense right now. There's going to be more competition in the market. There really is.
Okay, so if you're a buyer and you already have your pre-approval from the last couple of weeks or the last month and you're already out shopping, or maybe you've already had an offer accepted and your closing is coming up, what's the best way to make sure that you don't miss out on this? Like, are you stuck with that rate that you got pre-approved at? Or that
call your mortgage professional, ask them, do I currently have the best interest rate if I locked in 3 weeks ago? I've heard that the rates are coming down. Can I see adjustment to that rate? Most lenders, by just policy, will drop your rate at least once before closing, but there are several that do a float down, right? So they're going to let that rate continue to drop right up to closing. We've talked before that the lawyers really don't like me when I start changing those rates 5-7 days before closing, because they put a lot of work into it. But right up to the last minute, like the banks will let me change it. Yeah, definitely call your mortgage professional. Even if any of your clients or anyone listening has any questions, I'm happy to help. I'm happy to let you know where rates are sitting, where the best rates are sitting, and you can compare, right? Like, not even looking to see, bring your business to me, but just as an added benefit, call the office, right? Ask where the rates are at. Someone on the team will let you know, and you can compare and see if you're getting the best deals.
Yeah, I love that. It's one of those proactive things that we can do to serve our clients. And on the lending side, I don't know if everyone knows that that's available to them. So I feel like that's really helpful to put that out there, to say, hey, don't feel like, you missed the boat if you bought a month ago and now rates are improving. You could still maybe take advantage of this. And so I love that you're proactively doing that for your clients. I think that that's a huge value add.
Yeah. It's not all dark, right? Every storm out runs out of rain. This will too. The high interest rates will go. I know everyone's feeling a lot of pressure over that, but once they do go, it's going to be everybody ready to find that home.
Yeah. And that's a really good point. This market has been so up and down in terms of changes that I really feel like as a professional, you have to have your head in the game. You have to constantly be making sure that you're up to the minute, because there are times where things are shifting so quickly that I can't run comps that are older than like a week old.
That's right. So yeah, and for the average consumer, I'm sure that they're finding a lot of stress out of that, because they rely on us. They rely on us to give them the information. And the truth is, it is moving as fast as what you're saying. And we are just doing our very best to keep up with it all. If it's hard on us, it's definitely hard on the average consumer. It's definitely hard on the average purchaser and even sellers. So having the right mortgage professional or realtor professional in place is so important. Get your team set. You'll be successful. I'm sure you'll be very happy. Yeah,
absolutely. Thanks so much for joining today, guys. And if you got value out of this at all, I would really love if you could hit the like button or share with somebody else who might find it informative. And if there's something else that you're wondering about when it comes to real estate, I would love to answer the question for you, or find someone else that I work with on a regular basis who I trust to give you an answer to the questions that you're asking. So let me know in the comments or shoot me a DM, and I would love to set up the next video around questions that you guys actually have if you're looking to buy a home, whatever your questions may be about.